A cryptocurrency entrepreneur has been arrested.
Kwon has pleaded guilty in the United States to 2 fraud charges.
A 30-year-old clicked deploy on a piece of code. 168 hours later, $60 billion had vanished. But let me back up. May 7th, 2022, 11:47 p.m. Seoul, South Korea. Dr. Kim, a 43-year-old surgeon, just convinced his colleagues to invest their savings in something called Terra Luna. 20% returns, guaranteed by mathematics, backed by a Stanford graduate. His colleagues trusted him. He trusted the system. In 7 days, Dr. Kim will lose everything and won't be able to face them. May 8th, 12:03 a.m. A crypto trader in Singapore refreshes his screen. UST, Terra's stablecoin, is supposed to always be worth exactly $1. Right now, it's at 98 cents. He's seen this before. The system self-corrects. Always has. He goes to sleep. Hour 12, 91 cents. Hour 24, 83 cents. Hour 48, 68 cents. Hour 72, 30 cents. Hour 96, 18 cents. Hour 120, 9 cents. Hour 168, worth nothing. Luna, Terra's sister coin, goes from $119 to less than a penny. The entire crypto market crashes. Bitcoin drops 30%. Your 401k drops because of what's about to happen. Three Arrows Capital, bankrupt, 10 billion lost. Celsius Network, bankrupt, 12 billion frozen. Voyager Digital, bankrupt. BlockFi, bankrupt. And in November, FTX, the domino that brings everything down. All because of 7 days in May. This wasn't a hack. This wasn't fraud. This was code working exactly as designed. And watching it all unfold in real time from his Singapore penthouse was the man who built it. His name is Kwon. And his last words before everything collapsed? Steady, lads. Kwon wasn't a con artist like Sam Bankman-Fried. He was something more dangerous. A true believer who couldn't imagine being wrong. Born in South Korea in 1991. Studied computer science at Stanford. Graduated in 2015 and joined the startup world. Worked at Microsoft, then Apple. But he wanted to build something that would change the world. By 2018, he'd found his mission: destroy traditional banking. His weapon? Code. The problem with crypto was simple. It was too volatile. Bitcoin could swing 10% in a day. You can't buy coffee with something that might be worth half as much by checkout. The solution already existed: stablecoins. USDC, for example, works like this. For every digital dollar, there's a real dollar in a bank account. Simple, boring, safe? Kwon thought this was idiotic. Why would we trust banks to hold reserves when we could trust mathematics? So in 2018, he co-founded Terraform Labs with Daniel Shin, and they built something nobody had successfully done at scale: an algorithmic stablecoin. No bank account, no reserves, just code and game theory. Here's the promise Kwon made. This dollar is worth $1 because I wrote code that says so. And for 3 years it worked. Here's the system, and pay attention because this is where the fantasy starts. 2 tokens UST, the stablecoin, always supposed to equal $1. Luna, the volatile token that makes the magic happen. The algorithm works like a seesaw. If UST goes above $1, you can burn $1 of Luna and mint 1 UST. Then sell the UST for a profit. This pushes UST back down to $1. If UST drops below $1, you can buy cheap UST, burn it, and mint $1 of Luna. Sell the Luna for a profit. This pushes UST back up to $1. In theory, these arbitrage opportunities would always restore the peg. But here's the catch. This only works if people believe Luna has value. It's like saying this dollar is backed by my stock price. What happens when your stock crashes? Economists saw this immediately. Francis Coppola, a banking expert, tweeted, "This is a death spiral waiting to happen." Kwon's response? "I don't debate the poor on Twitter." Someone else warned, "What if there's a bank run and everyone wants to exit at once?" Du's response, 95% of you will die poor. Another critic, "The math doesn't work under stress conditions." Du, "Have fun staying poor." He wasn't just confident, he was openly contemptuous of anyone who questioned him. When someone pointed out that algorithmic stablecoins had failed before, Du tweeted, "I love all you poors crying about what I'm doing. Your tears give me fuel. This is the man holding billions of dollars of other people's money, posting this publicly. And people loved it. They saw confidence, conviction, a genius disrupting the system. They should have seen the red flags. By 2021, Kwon had a problem. Terra existed. The algorithm worked in theory, but nobody was using it. He needed demand, massive demand, fast. So he created Anchor Protocol, a savings app built on Terra. The pitch: deposit your UST, earn interest. How much interest? 20% annually. Your bank savings account pays 0.05%. High yield savings? Maybe 1% if you're lucky. Anchor promised 20%. Put in $10,000, get $2,000 a year risk-free. Except it wasn't risk-free. And it definitely wasn't sustainable because Anchor didn't actually generate 20% returns from investments. It was paying old depositors with new depositors' money. It's the exact structure of a Ponzi scheme. But it looked legitimate because the code was open source. You could audit it yourself. It was decentralized. No single person controlled it. Major venture capital firms invested. Galaxy Digital, Pantera Capital, Arrington Capital. Terraform Labs raised $200 million at a $25 billion valuation. If smart money believed, why shouldn't you? Money flooded into Anchor. By early 2022, $14 billion sat in Anchor Protocol. UST's market cap, $18 billion. Luna's market cap, $40 billion. Kwon's personal net worth, $15 billion. He was living in a luxury penthouse in Singapore, traveling by private jet, speaking at conferences around the world. South Korean media called him the next Steve Jobs. Time magazine featured him as one of crypto's most influential people, and he kept tweeting. March 2022. Someone asks, what happens if Luna crashes? Du's response, Luna will never crash. The system is mathematically perfect. April 2022. An economist warns 20% yields are unsustainable. Du's response, not if you understand the economics, which you clearly don't. Even as the cracks were showing, behind the scenes, Anchor was bleeding money. The protocol was spending more on interest payments than it earned. Kwon and the Luna Foundation Guard were constantly injecting capital to keep it alive. In February 2022, they made a desperate move. Buy $3 billion worth of Bitcoin as a reserve to defend UST's peg. Du announced it like a victory. We're building Fort Knox for DeFi. Critics saw it differently. This is a last-ditch bailout fund. They were right, but by then it was too late. The machine needed belief. As long as everyone believed Luna had value, UST would hold. But belief is fragile. And in May 2022, someone decided to test it. May 7th, 2022, 11:47 p.m. Someone dumps $350 million worth of UST on Curve Finance, a major decentralized exchange. UST's price drops to 98 cents. This has happened before. Small wobbles. The algorithm always corrects, but this time something's different. Hour 6, May 8th, 6 a.m., UST is at 95 cents. Luna drops from $83 to $79. Traders start noticing. Discord channels light up. Is this the death spiral? Hour 12, noon UST at 91 cents. Luna at $65. The algorithm is working, burning Luna to mint UST to restore the peg. But that means more Luna tokens are flooding the market. More supply means lower price. Lower Luna price means you need to mint more Luna to get $1 worth, which creates more Luna, which lowers the price, which requires more Luna. The loop is starting. Hour 18, 6 p.m. UST at 83 cents. Luna at $31. Panic is spreading. People are withdrawing from Anchor, billions flowing out. Kwon tweets, deploying more capital, steady lads. He sounds calm, in control. Behind the scenes, the Luna Foundation Guard is panic selling their Bitcoin reserves. They dump $1.4 billion worth of Bitcoin in hours. This crashes Bitcoin's price from $42,000 to $34,000, which triggers margin calls across the entire crypto market. Ethereum tanks, Solana tanks, everything tanks. Your 401k? It's dropping too. Tech stocks are correlated to crypto now. Hour 24, May 9th, midnight. UST is at 68 cents. Luna is at $11. The death spiral is undeniable now. Reddit, Twitter, Discord, people are screaming. I put my daughter's college fund in, 4 years of savings. What do? My entire wedding fund, $45,000. The wedding is in 8 weeks. I borrowed against my house to buy Luna at $30. I thought I was buying the dip. Hour 48, May 9th, noon. UST 30 cents. Luna $1. From $119 to $1 in 48 hours. Kwon hasn't tweeted in 12 hours. Hour 72, May 10th, noon. This is where it gets insane. UST 18 cents. Luna 1 cent. The Luna supply explodes from 350 million tokens to 6 trillion tokens. Let me say that again. The algorithm printed 6 trillion Luna tokens in 72 hours. That's like the Federal Reserve printing 600 years worth of dollars in 3 days. The code is still running, still trying to save UST, still minting Luna, but nobody wants Luna. There's too much of it. It's worthless. The algorithm is working perfectly. It's doing exactly what it was designed to do, and it's destroying everything. Terra's blockchain starts failing. Too many transactions. Validators shut down. Hour 96, May 11th, noon. UST 9 cents. Luna, fraction of a cent. Binance delists both tokens. Too volatile. Danger to users. Other exchanges follow. Hour 120, May 12th, noon. Terra blockchain halts completely. It's over. Hour 168, May 13th, at midnight. UST trades for pennies on obscure exchanges. Luna is essentially worthless. 7 days, $60 billion? Gone. Kwon finally tweets, "I am heartbroken about the pain my invention has brought on all of you." Too late, but the devastation was just beginning. Remember Dr. Kim from Seoul? He convinced 6 colleagues to invest. Combined, they put in $230,000 and it's now worth $18,000. He stopped going to work. Can't face them. Reddit. May 14th. I'm a nurse. I put in my entire retirement. $87,000. I'm 61. I have to work until I die now. Another. I told my wife we'd pay off the house with the gains. I took out a home equity loan. We're going to lose everything. Another. Kwon mocked us. Called us poor. While he was destroying our lives. I hope he rots. But Terra's collapse didn't just hurt its investors, it was the first domino. Three Arrows Capital, a $20 billion hedge fund, had massive exposure to Luna. They couldn't meet their margin calls. June 2022, bankrupt, $10 billion gone. Celsius Network, a lending platform with $12 billion in customer deposits, was heavily exposed to Terra. June, withdrawals frozen. July, bankrupt. Voyager Digital, bankrupt. BlockFi, bankrupt. Genesis Trading, bankrupt. And in November, the biggest domino of all, FTX, $32 billion. 1 million customers. Sam Bankman-Fried in prison? All of it traces back to May 2022. Terra's collapse exposed how fragile the entire crypto ecosystem was. Every company was over-leveraged, borrowing from each other, betting on the same assets. When Terra fell, it pulled everyone down. Meanwhile, Kwon vanished. September 2022. South Korean prosecutors issue an arrest warrant. Charges, fraud, market manipulation, breach of capital markets law. Interpol issues a red notice, wanted internationally. Keeps tweeting, "I am not on the run. I'm still in Singapore. Singapore authorities, he's lying. He left months ago. This is a witch hunt." Tweets, "I have nothing to hide." Investigators track him to Dubai, then Serbia, then Montenegro. He's traveling with a security detail, staying in luxury hotels, living off hidden crypto. March 23, 2023, Montenegrin police arrest Kwon at Podgorica airport. He's trying to board a private jet to Dubai, using a fake Costa Rican passport. "I am not on the run," he'd said. He was literally fleeing with forged documents. Both South Korea and the United States request extradition. For months, sits in a Montenegrin prison while lawyers argue. February 2024. The court decides South Korea gets him first. He's extradited to Seoul, currently awaiting trial on fraud charges that could mean decades in prison. His co-founder Daniel Shin faces similar charges. tried to revive Terra, launched Luna 2.0, a reformed version. Nobody cared. It's trading at pennies. Terra is dead. But the question remains, was it inevitable? Or was it murder? Remember that initial $350 million UST dump? Some people think it was a coordinated attack. Here's the theory. A sophisticated hedge fund or trading firm spotted Terra's vulnerability. They knew the system only worked if Luna maintained value. So they accumulated massive amounts of UST, borrowed Luna to short it, dumped UST to break the peg, watched as the algorithm minted more Luna, crashing its price, profited billions on the short. Some analysts pointed to Citadel Securities and BlackRock. Both immediately denied involvement. We had no positions in Terra. Others suspect Jump Crypto, a major trading firm that lost millions in Terra and might have wanted revenge. Still others think it was Terraform Labs insiders who knew the collapse was coming. The truth? We don't know. And it doesn't matter. Because here's the thing. A real financial system can't be destroyed by $350 million. If someone can break your mathematically perfect system with a single trade, your system was broken from the start. Imagine if someone could destroy the US dollar by selling $350 million in treasury bonds. It wouldn't happen. Because real currencies have central banks with unlimited capacity to defend them. Decades of institutional credibility, government backing. Terra had code that worked perfectly, right up until it didn't. And when it failed, there was no safety net. No lender of last resort, no FDIC, no Federal Reserve, just an algorithm minting 6 trillion tokens while the world burned. Lesson 1. If it sounds too good to be true, run. 20% risk-free returns don't exist. Period. Banks pay almost nothing because they invest conservatively, boring, but safe. When someone promises 20%, ask, where is that money coming from? If they can't give you a clear answer, it's a Ponzi scheme. Lesson 2. Code can't replace trust. Kwon loved saying you can't break mathematics. But mathematics requires assumptions. Terra's algorithm assumed people would always want Luna. When that assumption broke, the math became irrelevant. Dollars work because the US government backs them. Millions of people, centuries of institutions, military force if necessary. Terra had none of that. It had code. And code doesn't care if you lose your life savings. Lesson 3. Arrogance is dangerous. I don't debate the poor on Twitter. Have fun staying poor. Your tears give me fuel. When someone talks like this while holding your money, get out. This isn't confidence, it's contempt. Economists warned him, he ignored them. Developers questioned the design, he mocked them. And $60 billion vanished. Lesson 4. Smart money isn't always smart. Galaxy Digital invested, Pantera Capital invested, Arrington Capital invested. Combined valuation $25 billion. So they all lost everything. Just because venture capitalists invest doesn't mean it's safe. They have risk tolerance, you don't. They have diversification, you don't. If Terra goes to zero, they lose one investment out of 100. If Terra goes to zero, you lose everything. Kwon is in prison awaiting trial in South Korea. Terra is dead. But here's what nobody's talking about. Right now, there are 47 active algorithmic stablecoins. Combined market cap, $8 billion. Most of them use the exact same design as Terra. Mint and burn mechanism. Volatile token backing a stable token. No real reserves. The same flaw, the same vulnerability, the same death spiral waiting to happen. And their founders are saying the same things, Kwon said. We learned from Terra's mistakes. Our algorithm is better. The code is mathematically sound. Kwon said that too. We've seen this pattern before. Theranos, revolutionary technology, charismatic founder. Turns out the technology never worked. WeWork, visionary CEO, billions in funding, no actual business model. Terra Luna, mathematical perfection, until it wasn't. FTX, ethical billionaire, except he was stealing everything. The next one is being built right now. Brilliant founder, revolutionary technology, too good to be true returns, smart investors who should know better, and millions of regular people about to get crushed. So I want you to think about something. What are you invested in right now that sounds too perfect? What founder are you following who dismisses all criticism? What project has a flaw that nobody wants to acknowledge? Because somewhere right now, someone is clicking deploy on code that will destroy billions. And they think they're smarter than economics, just like Kwon did. Drop your theories in the comments. Which algorithmic stablecoin collapses next? Which project has Terra's DNA? I want to know what you're worried about. This is part 3 of our crypto collapse series. 2 weeks ago, we covered FTX, how Sam Bankman-Fried stole $8 billion and got 25 years in prison. The week after that, Three Arrows Capital. 3 billionaires on a yacht? $20 billion under management? And a single bad bet on Terra Luna that destroyed one of crypto's most respected hedge funds in 48 hours. The story involves luxury real estate, private jets, and 2 founders who fled to Dubai to avoid arrest. Subscribe so you don't miss it. And if you want more stories of brilliant ideas that catastrophically failed, check out our Theranos Deep Dive. $9 billion, celebrity board members, and blood tests that never actually worked. Thanks for watching.